I wonder if they'll stay more volatile because it is a newer trading instrument, if you will. Um, the the um, the E-mini's been around for a long time, but the micro E-mini's brand new. So now that they have this micro and more people can trade it because it doesn't take such a big account and the movements aren't so high, maybe they'll stay volatile, and something that'll just keep continuing to flow. If not, then when this dies down, then we go to stocks, and just kind of like, Rubicon, the low price stocks, we would get in those times where, people, I know Tango rolling, they'd be like, scans are bad, nothing to trade today.
Yeah.
Well, on a lot of the times when that kind of stuff happens, it's like there's always some sort of sector to play, and it's just getting well rounded enough to where you can make money no matter what every day. And
Yeah,
that's
there may not
that's
be any penny stocks moving, but Roku may just made a 50-point move in a day.
there you go. There you go. So it's just learning how to be versatile and not, I know, and I'm not saying jump into everything, but in my opinion, you do have to, I've heard some people say, focus on one setup, and that's all you do, one setup. But to me, that one setup may not be working at that time of year, and you're focusing on it, and then you're like, this doesn't work for me. Well, maybe it's just the season that you're in. So you got to be able to see the trends in the seasons and be more versatile. And that's why I love taking Dark Side's class, because you're learning how to trade the chart. And so a chart is a chart. So now I'm taking what I've been learning and studying from Dark Side for almost a year, and I'm switch over to futures. Never traded futures in my life. Didn't know anything about it before 2 weeks ago, and I make over 900 bucks in 2 days. Well, I wouldn't have been able to do that if I didn't know how to trade the charts, because I didn't. It's not like I had a catalyst where I'm like, oh, well, news dropped on this future and I know it's going to run. Well, I mean, there's the overall market news, but the bottom line is you got to know how to trade the chart. And
Yeah.
once you do that, you can trade anything.
And then once you get more comfortable with it too, you can buy more than one contract and
Absolutely.
double or triple, what you're making.
Yep.
That's why I wish I would have bought more than one contract yesterday, but at the same time, I was like, I'm not getting greedy with this. I'm still trying to figure it out.
Yep. Me too. Me too. Getting
We'll
my feet wet.
take what I can get and wait for the next time.
Absolutely. All right. Well, Dark Side, you ready?
Yeah, we're good.
Turn it over to you, buddy.
So, I guess we'll just go over the sentiment of the market. We can talk about some futures and stuff if y'all guys want. Answer questions. It's pretty much open. The charts, pretty much, I'm going to say overall, if y'all got some ideas to look at some charts, we can. But the overall direction of way everything is setting pretty much across the board, other than a few um, just a few isolated charts out there. Most of the market is pretty much the same when it comes to what things look like in general. So we got to be right now in the mindset of the generalization of how the market is moving more than the individual stocks. You have a little bit of a different catalyst, like you're going to have the stocks that are moving that are part of the related to the virus will give you a different response per se than the generalization of what an average stock in the market is doing. So those would be somewhat independent. Things that are connected to oil will give us a little bit of different connections, just because we've got different type of news in the oil, that has came out in the last week. So those will have a little bit different sediments. But in general, if you're just going in there and looking at an average stock that doesn't have its own unique catalyst, you may say, usually we always say, well, it usually follows the market in general. This is really the real case of that, where the market drops, the stocks are going to drop right with it. The patterns are going to be pretty darn close to the same. They may be some variances because you got each individual stock trying to create its own little market inside of itself, that you'll have some variances where you may have bigger wicks or bigger candles. You may have a little bit of back and forth, where they try to shake you out a little bit more. But overall, if you zoom out of the chart and look at the big picture of how the stock has kind of developed a pattern, it's pretty close to the same in general across the majority of the stocks out there. So we're more or less need to be paying attention to the generalization of how the market is going at this point, because we are in historical times right now. We basically are having to look at, previous crashes, previous recessions to see how things go. But this is different. This is a little bit different than the past, because we had heavy manipulation just about in every type of market crash that we've had in history. We've had, the greed factor kick in some sort of way or form that has created a balloon bubble, basically, that eventually popped. And we are in that same scenario now, but it's a little bit different than we've had in the past. You had heavy manipulation of the market with zero pretty much regulation back in the 1920s. The 1920s were the big flare up, industrial revolution. We had everything was just going crazy for about a decade after the war. And things just became really great for them. And manipulation was crazy back then. And that's the reason why we had the SEC today. Roosevelt put that in place to actually create the some sort of regulation out there to try to cut back on the manipulation. And he put Kennedy, our former president's father, in charge of it. And the reason why that he was put in charge of it, because he was a former person that liked to manipulate the market. And he was one of the best individuals that could figure out what was going on to catch people doing manipulation. And so he was in charge of that to start everything. As we go through history, we have, the 1987 crash. We had inflation going on. We had a lot of problems with the savings and loans going on back then. We had more or less a buildup of pressure at the same point, market crash. 2000, we had the dot-com bubble. Anything that had the word .com next to it was inflated. Total crap companies were flying through the roof. Starting to sound familiar? Total crap companies flying through the roof. Reality sets in, no value to them. We get a pop, we pull back, have the .com. Basically, the same thing happened in the 1920s, but we are a little bit more regulated somewhat. Okay, so we get into the housing crisis. We get into the greed factor of the banks trying to just, creating massive amounts of buildup of, people with homes and stuff like that can't afford them. Then they go in there and say, well, we'll lock you in for 2 years with a fixed rate that you can afford to pay. And we're just going to start putting you on a variable rate after that. And then, of course, everything's higher at that point because of the factor that everything's doing better. We have higher interest. And then all of a sudden, everybody starts getting foreclosed on because they can't afford it, because now their mortgage payments have, gone up at least half, if not double. And so all of a sudden we have a big problem and we get the pop, more manipulation. We're in a situation right now where now the virus is creating a big problem. We still have manipulation going on, guys. How many stocks have you noticed in the last 10 years been flying through the roof? And they come back and say, well, we lost so much money on our earnings report, but we lost less than we expected. So instead of us losing 10 million on this quarter, we only lost 8 million. You still lost. You're still worth nothing per se. We've created another bubble here. We've basically created a frenzy of companies that frankly say, we're going to be the next Amazon, which Amazon got away with it. They were doing the exact same thing. They were running basically as a loss for probably 5 years or so before they finally got their traction and started becoming a profitable company, but those are a lot more rare. Now we've got just about every IPO that comes out is going to the market because they're wanting money, because they are failing, and so they have to go to the money, reach a hand out, and they're like, we'll be profitable 5 years from now. Well, it's starting to catch up. So the overinflation is creating the pop. That's why we're dropping so hard as we are, because the reality of the value of companies is starting to set in. We're starting to get the sediment of setting in of the value of where we stand with companies. The strong companies that are profitable will survive. The strong companies that have a surplus of capital sitting inside of their accounts will survive. The companies that have been playing the game that we do not have money, we want to go to the market for our money all the time, and just basically playing the scam more or less, that are not have basically very little chance of making it without the market money, are the ones that are going to perish. And so we're going to see a lot of companies in the coming year that are going to start falling apart because of this pullback, because we've gotten a big pop, because we've basically have lost. If we go back to where we stand in a big picture, off of our actual runs that we've had, we're now trading down here at this level right here. Well, this was back in 2018, around the Christmas holiday of 2018. We're now trading basically right over here in the same area. We've lost 2 years of gains in 2 weeks. So therefore, we're starting to get the balloon is getting ready to pop. As this area gets compromised, we're going into 2009 run up, which when we go back, weekly chart would be easier to look at. We go back all the way back to the 2009 low, where we basically have that nice little dip, and then we start taking off our 11-year run. This is what we're actually playing with right here, guys. We're just coming down and basically slapping everybody in the face to say the last 2 years, everything is now gone. So the balloon that's been getting really inflated is now coming back down to reality. Now we're starting to get companies that their value of the realistic value of where they're at is where we should be considering them. So the fundamentals need to be reanalyzed at this level, not at that level that we were before, because, well, we're not going to be back up at that level anytime soon. We're going to have to basically work our way back up there. We make this our floor, we're going to have to slowly move it back up, just like we did back in 2009. We're going to have to gain it up, just like we did on the pullback we had back in 18. We had to work our way up. You see what happens is once you break above that high, that's when things just start taking off really hard. We look at what happened in 09 over here. We started slowly creeping ourselves up. But what happened when we broke the high level over here that we were trying to recover? We took off. This is how the market pretty much runs. So we have came down all the way down to here. We're going to have to dig ourselves out of a hole to slowly grind our way back up before we get to the top, before we have a chance of taking off again. Thing is that we can drop down into these levels down here. We still have the ability to do this. We go and actually look at how far we can actually drop. Here's the 2018 level right now. We're down here at 100% gap fill, down in the 230s. Low 230s, 235, 231. We had the 238 circuit breaker we were kind of thinking about the other day. Well, what makes a big deal about the 230? Well, this is 100% gap fill right around this ballpark here. And this is actually lower here because I actually zoomed in for some pre-market data. We had a little dip by it that day. But even if we pull this up and get rid of the pre-market data and go right up to the actual just full day data, we're still at 233 at this point. 235, which we almost touched. Actually, we broke through it. Weren't we at two? No, we almost touched it. The futures network touched 239 and some change. So let's just make it 234 flat, because they had basically their downside lockdown, which is basically kind of like a circuit breaker halt saying you can't go any further. You can go up, but you can't go down any further. We hit that level Thursday night. Okay. So no, over Thursday night going into Friday morning. The only reason we didn't hit 235 is because of basically that circuit breaker stopping us. So the 235, why is that important? This is basically the 38%. 38% from what? 38% from all the way back from basically the pullback of the recession of 2009. All the way from basically our glory high to the low point before we started taking off. We got out of the housing crisis crunch to basically day one of taking off from that, finding the bottom at that point. We are at the 38% pullback area. We are in a bounce zone. We're in a nice, healthy bounce zone for us to be able to get back to that high if we stop the bleeding here. But we got to stop the bleeding here. We're not going to be able to get back up to that level in 2 weeks like we dropped down that level. It took us 2 years to get there in the first place. So we had to assume, which I hate to do that in the market, but the reality is of how the market runs is we're probably 18 months away from trying to probably get us back up to that level again. If we can just stabilize where we're at. The next area we have for pullback zone is going to be down here at the 50% area, which will be right about 200, 203. This area, you can see it's been quite a bit of a grind and support. Should be a decent area for support and everything, because the 2018 level right here, hitting that is giving us some level. But do you really see some strong support right here? Other than we basically are coming down to a triple bottom, basically, because we had a nice little grind before it took off, and then we had this hit, and we're hitting it again. So yeah, so we should respect this level somewhat. But where we have this heavy grind over here is a more realistic bottom than this area over here. So losing 50% of the market run is very realistic. We can still have it to where we can slip down to the 200. You know, and basically everybody's going to lose 120 points off of the last couple of years if we hit that level. We don't want to see that because that's a pretty hefty drop. That's still another 30 points down further than we're currently trading at right now, 30 to 40 points. I think we're going to have a stabilization here for at least a short period of time before we basically figure out what's going to actually happen next at this point. We go and look at the more localized area where we're currently trading right now in the last 24 hours or so. We did create this pattern, this harmonic pattern that we talked about in pre-market. Remember, I drew this thing during the pre-market session yesterday. Well, where do we wind up at? And I was just kind of throwing an eyeball on it. I wasn't even really measuring this thing, because usually I just put it in here and start looking at these levels, saying where we can get. Well, it wasn't very far off from it, was I? We got a more or less a structured support resistance line that's moving up, that's giving us more or less a hold area. We're getting the pullback now. We have the overall downtrend that has been somewhat respected. This needs to be redrawn because it's getting out of whack. But you can see where we've kind of come across this area, and we should be right in this ballpark. We just need to readjust that. But basically, we've got an area we're going to be coming down to off of this trend area for it to come down. This pattern has basically two patterns inside of it. We have the big picture pattern that I just showed you, and then we have a small pattern right here that is doing the exact same thing. We have double patterns. We have an intraday and we have a multi-day pattern. The pullback off of this leg needs to pull back a minimum of 38% with room to 61% to complete its pattern. So we need to come down to this low area and say, where are we going to stand at? We're at 23% right now. So for this to actually play out and pan out, we really should drop down to right around here, which would be about 263. We should see a nice little hit and then look for a potential bounce. But we need to also consider we need to have room all the way down to where we came from down here, which is basically by the time you redraw this trend, you'll see the 38 is probably going to be the realistic trend line. If we go in here, and let me just draw a temporary one here. You see where our 38 is? So we could hit it, maybe get a little bit lower before we kind of get that bounce. This is just going off of the slope off of this. We look at this point down here as also a possibility that where we actually had that pop at could be a part of it also. Because yes, we still got it to where it somewhat falls within this category, which makes a little bit more sense. And where would that actually drop us down to? Down to the 61% level. So we have to look for room somewhere around the 38 to the 61% level as a potential area to clean this up. We hit these levels, now we're going to be free and clear to start making a whole nother pattern for a potential push back up. Usually when we see these type of patterns, we start getting the development of a basing somewhat. This is a bearish pattern right now. And the reason why we call it a bearish pattern, even though we ran up, is because once the pattern is completed, the completion of the pattern is telling us that we must reverse. So this is doing exactly what it's supposed to be doing. Key thing is that I'm looking at is we're going to be somewhat concerned about, we got to look into is, okay, yesterday Trump talked into the close about stimulating the oil. That strategic reserve, refilling the strategic reserve, is a huge booster shot in the economy. This is going to help the oil sector a lot, which is what drove us down last Sunday dramatically. This is going to help stabilize that somewhat. That was a major thing that happened right there. So this can help us move up to a certain degree, but we still got the virus to deal with. The next thing we need to look at is Sunday night. He made a comment yesterday that he's going to be talking once again, some sort of stimulus. They're probably talking as we speak, going through the weekend, figuring out what else they can do about the bleeding of the economy. We need to look at this as we need to look at that information when it comes out and reevaluate the situation. Just because we have a pattern doesn't mean that a breaking news event can't screw that up, and it must complete itself. Because a breaking news event will trump the pattern, and it could correct it to make it start moving a different direction. So if we don't get any type of breaking news, we need to follow the pattern and look for what it wants to do, because the technicals will continue doing what the technicals do until it has a reason not to do what they need to do. So we need to be paying close attention to Sunday afternoon, night, or whenever he's planning on talking to see what he's going to say. And if he says something significant to stimulate the economy somehow or another, then we can start looking for it to start breaking and pushing these levels over here. So that's pretty much where we're standing right now with the way the market is. We are in a situation with the virus that we're in early stages. I believe that the market will stabilize before we get to the worst of the virus. Market always seems to be ahead of the situations of things happening majority of the time, and we got to pay attention to the money that's getting flowing through. And we had some seriously amount of shares, volume, cash that came through yesterday afternoon. We had a $500 million worth of shares come through just in one transaction, of monetary value, just in one sell. That's saying something. That is unusual activity. We've got unusual activity happening right now with the institutions. We are trading at a higher level than they're doing their transactions at, which is kind of giving me the impression that they were doing the exact same thing they did the Friday before last, that they came in with their numbers, started setting a basing, even though we were trading lower than their levels. And then towards the end of the day, we get that pop refill, and then we rally up at the end of the Friday session going into Monday. And what happened that following Monday? We pulled back a little bit, and then we took off. So we could have a complete exact same scenario happening again on Monday. So I'm not really hell-bent on continuing the market on the downside, because I'm starting to see the potential stimulus coming in a little bit stronger. And I'm also seeing that we've got some activity. Now, we don't have the same activity we had on that Friday before, where it was just blatantly obvious that they were going to bounce this market. We don't even have half of the same amount of traffic coming through. So we got to basically still be cautious as far as the ability that they could be playing the game of buy low, sell high, and they could be boxing us in with the transactions that they're doing. They basically could just, okay, you've popped us up to the level, then we'll turn around and reverse it and bring it back down. So the possibility of us going up and down, and going sideways is just as relevant as a potential continuation. So we can't assume that we're just going to fly through the roof on Monday until we start seeing that the price action is taking us towards that direction. So we're just all about, paying attention to the charts, paying attention to the news that's coming out to see if we see any sense of direction, pay attention to the money flow that's coming through and how they're moving their transactions around. Because really, that's all it comes down to. We have to ride on the skirt tails of the large money. We're not going to be able to go against it. Otherwise, we'll get rolled over like a steamroller came across us on the ground. We're just going to have to pay attention to the money flow, the breaking news, and the charts to keep us going until we start seeing some normalization. Once the bottom starts settling in, we'll start getting the analysts that come out here. They're already starting to try to reevaluate and trying to come out with new price targets. But all they're doing right now is they're just lowering price targets. They don't have enough information on fundamentals of where these companies are going to stand on their guidance for their next coming earnings and the one beyond that, to be able to give us a good quality value of what each company stands at this point. We won't really know all this information until we start seeing at least another earnings season roll around. And the next earnings season roll around is going to be a bloodbath, because I don't think anybody's going to hit their numbers out there, because this is an event that hit most of the majority of the industry out there like a ton of bricks. The only people that kind of see this stuff happening and stuff are the guys that are moving the market around, the dart pulls. They know what they're doing. I don't feel sorry for the banks. I do not feel one bit sorry for them. Them and the large institutions and hedge funds that have the ability to be on the dart pool network know exactly what they're doing. And they are making so much money right now, it's not even funny. So don't feel sorry for your bank. Yeah, they're dropping share counts and stuff like that, but on the backside, they're the ones that are pushing this market around and making this happen. We had an event like this, not as bad on a global scale, back in 2009. The scale that we've got going on right here is going back to 1918, when we had the Spanish flu, the swine flu. Well, we had the H1N1 that came through in 09, swine flu also, that hit us, which is actually in our country was worse than we are today in our country. Obama did not act upon putting a national alert till 6 months into it, and there's 1,000 Americans dead inside of our country before he enacted the same thing Trump did on Friday. But globally, this is worse. This is a stronger virus than that one was. So the market is heading into reacting ahead of time, because the market did not react as well last time because they weren't pushing it around like this, because it was just kind of underneath the radar. It wasn't out in the media. It wasn't publicized and pushed. So the fear and the greed wasn't there as well as it was right now. Not to mention, we were at the bottom of a recession. This is a perfect storm setting here waiting to happen. Everybody knows the market's overinflated and needs to pull back. They're just popping our bubble right now. So we've got a situation that we've got to basically just monitor what the big traffic's doing, because they're the ones that are making all the cash right now inside of the market and stuff. Shares are going down. These banks are not going where they're going to go right back up. They're making money on the back end of it. Now, maybe the smaller banks that don't play in the dark pool network are the ones getting crushed, but these big ones are certainly making plenty of cash off of the system because they're making the moves before the moves happen. So you can't tell me that they're not making a lot of money on that backside, because they're the ones that are making the decisions of which direction we take this market based upon whatever their agenda is. And they're doing it before we get breaking news. They're responding. They've got the insight. Somebody knows something, even though nobody's supposed to know nothing. So we've got to look at more or less, just play the price action. See, us as retailers, we have a great, beautiful opportunity to make money. The individuals that are just, sideline investors with the 401ks are getting crushed. I feel my heart bleeds out to them. I mean, it's just, this is terrible. Every dollar that they put into the market since 2018 has gone away. This is awful. The seniors are not going to have time to catch up with this. You need to feel sorry for your grandparents. But there's nothing saying we can't make money as a day trader inside of this market and as a swing trader. The swing side is going to be a little dangerous right now. We need to let the market kind of settle down a little bit. But on the day trade, we've got such great opportunity to be making money here, just playing the chart. And we've been talking about futures and stuff. The future network has given us a whole new opportunity with going into more or less. The minis have been around since the 1990s, and popular futures type system, the old original futures floor that is traded still today with the huge large cap money, is a very small amount of traffic that happens on any given day. Maybe 800 shares gets traded a day on that in that system. But the mini, since the electronic trading system has kicked off in the last 30 years, has done very well for itself because it's less than the actual futures in the floor itself. So people have been making tons of cash off of that for decades inside of the mini. But you had to have a large amount of capital in order to make that type of money in there. Then last year, Chicago Exchange comes up and says, you know what? We got so much retail going on. There's so much individual traders now that are in the system, especially since crypto has came out. And this is their fight against crypto, is they decided to come out with the micro. And the micro is 1/10 of what the mini does. So now, instead of you having to have a huge account to really have a good position inside the mini and look for massive swings of currency back and forth in your account on your P&L as the chart's going up and down on you, the micro has given us the opportunity as an individual trader that's under the PDT rule, that has a small account, to be able to be making hundreds of dollars and sometimes thousands of dollars per trade with a very, very small account off of this. This is a great opportunity that they came out with. It came out middle of the year last year in 19. And it is now starting to take off dramatically because of what's happening right here. It's getting real popular. It was a little popular when it first came out because it was a new event. And, it's pretty much, like I said, the answer to the cryptos. So everybody's starting to kind of jump on board with this type of a system because it's able to be able to make a lot of cash in a small amount of time, and it trades 23 hours a day, just like the crypto pretty much does. So people are just eating this thing up. I know y'all guys have gotten real interested in it in the last week. So the key thing is about this futures, it's not for everybody. The individuals that are in our chat that are doing well are students of mine. They have been in my class for almost a year now. They're advanced level students in the technical side of the trading. You as a new trader that are just starting to learn this process, you can still get into it, but be very cautious because you do not know what they know about the charts. They're playing the charts. They are watching and waiting for those pinpoint entry points and those pinpoint exits in the charts. Y'all haven't gone through the course far enough to be able to understand what they're doing. So you can lose money in the futures really fast. You could be in it looking just great, and then all of a sudden the thing just makes a pop. Now you're down 200 points on one contract, or you're down 400 points on one contract within a matter of minutes. The futures moves around quite a bit, especially the way the market is moving at this current time right now. So be careful. This is a technical type plays here. Yes, it is driven by still fundamentals, overall sentiment of the market and what the SPY and the Qs are doing and the Dow and the Russell. But you can lose a lot of money in the futures if you don't know what you're doing with the charts. So let's get excited about it and look at potentially trading it, but be careful with it. And if you guys want to go ahead and open up futures accounts and you want to get into and start dipping your toe in the water, fine. Maybe paper trade it for a little bit until you start understanding it. There's nothing wrong with doing that either till you start getting the concept behind it. Because if you don't know enough, as these advanced students know, you will blow your account up. You can blow your account up really quickly. So just be very careful with it. It's a great place for y'all guys to get underneath the PDT in a real fast status. You could be doubling your account within a week. But at the same time, and that's not even what's going on with the market. You could double your account within a week before we had this problem. Now we're just moving it about 4 times fold. So just be cautious with this and everything. Let's open it up to anybody who has any questions.
Hey, Brian. Do you think they drove this market down, used the excuse of the virus for the market makers to drive an inflated market down?
I kind of torn with 2 different opinions on that because I see the exact same thing that happened in 2009, but we were at a bottom market already. But this is bigger than 2009 because globally we've got a bigger outbreak. Here in the States, we don't have as big of an outbreak yet. We're not even close to that. We've got 50, 60 deaths so far in our country. By the time the 2009 even was implemented with the Emergency Act, over 1,000 people were dead, and we had up to 274,000 people that were infected with it across our country that were inside of hospitals already. The numbers are not at the same level at this point, but this is a great reasoning to bring the market down on the global scale because we have weakness across the whole country and across the globe when it comes to the virus in general. And why should we go up? Why should the United States go up just because we're not affected like Europe or like Asia right now? I mean, it's a perfect storm waiting to happen for it to put the pullback. We're at a high. We're basically going to be doing what we should be doing. We should be pulling back. And this is going to be a real great reset point. So we will stabilize. We're not going to go down to 2009 level, down to back where we started 11 years ago. We're not going to fall that far. And anybody thinks that we're going to do that's crazy. I mean, that would be unheard of in history. If you look at the creation of pretty much the market since the beginning of the market starting, it moves up every 10 years. There's a positive gain. So if you're a long-term investor, you can pretty much almost, you could say as a guarantee that you're going to have a positive gain decade over decade. You're going to have the back and forth because of the little small recessions that you have. Even the Great Depression pulled us back to a significant level, but we didn't break down and go start back where they were multiple decades ago. So this is something that was inevitable to have. We've been talking about not just me, but I mean just in general, everybody out there that is pretty knows the market inside and out. When you look at the people that pop up on CNBC and stuff, there's the so-called experts, you may say. Everybody's been expecting that we need to pull back because we've never gone this far ever without a pullback that's been significant. So all we did by going up this far is give us a bigger cushion to fall on. So I don't expect us to be getting down to the 216 level. Back when Trump got in office and we had another little burst, I don't expect them to basically look for the last 4 years are erased. I don't see them pulling it that far back. I think the stabilization is going to be coming soon. I think that we may be another 2 weeks out from possibly that happening. This could be it here. Depends on how much stimulus we get into the economy. If we get a really good booster shot here, then we'll start sideways grinding. We'll get pops here and there, but we'll start seeing that this is the base. I think it's a little premature to say that this is the base yet until we start really seeing how well it's holding at this level and stuff, because we're basically, if you look at the big picture chart, we just basically just tapped this low one time since the last time we were there. And we know things like to retest the levels before they like to make it a hard base area.
Thanks.
You don't think that the 2-tap, 3-tap rule applies to the market right now as far as breaking it down?
Just because something taps 3 times doesn't mean that it's going to break down for sure. So it's just that usually it takes more than 2 taps to break it. That's why we get so many double bottoms. So we have decent odds of breaking through this because we're just in early stages of the virus. We don't have like 5,000 or 6,000 deaths in our country. I mean, or 5,000 or 6,000 deaths in our country, like we did when in 1918. It was 670 something thousand people died back in 1918. Of course, medical's different today. We're more informed today, but as people back then didn't mingle like they do today. We weren't in airplanes back then like we are today, so things are just we're repeating history. We're just basically got a modern version of it, and we're more well informed to be able to try to cut back from that of repeating itself at such a dramatic level. So the breakdown can occur, but we're at a good stabilization point because for two reasons. We're basically back at the 2018 levels. I'm probably pulling those so the chart look easier. We're down here at the 2018 level. One thing, we're pretty close to 100% gap fill. Totally racing 2018's okay. But you also have support from 2009, double support basically. So that gives it a little stronger area for us to think twice about breaking it. You know, so we had the pullback on the right around here at 275, which is the 23% pullback off of the massive run from 09. At the same point, we had the 61% level at that also off of 2018. Well, usually 61% is a good enough of a hold. May have some slippage sometimes, but that's our golden ratio. We had some real nice support in this area. Still didn't give it up. I mean, it still gave it up at this point. Took a day or two, but we broke through it. So this level right here has lighter support than it did over here, but it has a 100% gap fill, and we've got another support. So we stand almost at the same level as we did over here with the 23%. But majority of the time, when we have a negative impact on something, 23 is always compromised. 23 is the area that we hit, and if we don't break through it, the 23 is a guaranteed hit almost. Whenever we have a pullback, all stocks will be a magnet to 23. So if you say, "Oh, this is the top," and I know it's the top for certain, you can pretty much have a high 90% chance that the stock will come down at least to that 23%. They happen 9 out of 10 times. That is the area where you're like, okay, how strong am I at that point? Am I strong enough that I want to continue my trend? That'd be a great dip buying opportunity to continue it back up. Once you start breaking that level, now you can get into patterns. So now we can get into a pattern because 23% of the 38% is the first stages we need for pattern development to start happening. We have such a bad problem with this being a global event. We really need a pattern. Then we need just a continuation bounce. Because what is it telling us about the market if we come down to 23, shake it off like, no big deal. We took some profits on our longs and we reloaded to run it back up and the world is suffering. So 38% turns into pattern now. So now we have something we can look at as a potential area that we could look as something we could look at a possible bullish pattern. We could see something like this developing off of the 23. I'm at the 38. We could start seeing stuff like this happening, something like this. And that would turn into a bullish pattern to pop for continuation later. Now, this is at an extreme, but what I'm saying is that what I'm getting at is for purposes of a big picture pattern to develop, the 38 has to be met for us to have something in order to it. That is the bare minimum for us to start having a quality pattern to start developing. Is this going to be the floor? All depends about how bad it is and how great our stimulus is. Our stimulus is decent. We'll stabilize and start sideways and eventually start working our way up in coming months. If that stimulus isn't very good and the outbreak is worse, starts getting worse and worse and worse, we'll probably break through that and we'll probably start heading down to this level here and stabilize there. Still starting to develop patterns.
I have a question, or not really a question. I just think that, right now the market's falling and all it is more or less rumor. It's not real news yet because we've not really been hit. So I think you're your support level further down is probably more likely.
Yes.
What do you think about the dark pool prints yesterday at 27 or 271.45? I just find it really interesting that those are pretty much right at the top of the pattern at the D point.
My argument too, dark side, to what you're just talking about, is the 23 is very going to be broken if you're going to continue, if you're going to break trend or continue on. And if you go from the all-time highs and do your swing low, swing high, we are at the 23 right now. So this might be a point to reload and bring it back. Do you know what I mean? So if you draw on the daily,
Are you talking about the 23 from our bounce off of the top?
yeah. So on the downtrend, if you draw from the all-time
on this chart, that's what you're saying.
Because 270, I had that fib at 270, and we're $3 beneath it, hitting, the 5 EMA. I mean, if that chart was inverted and pushing, and it pulled back to the 23, we'd all be reloading.
Yeah, let me make another chart. This is getting too messy for y'all to even see what's going on here.
Yeah, mine doesn't look far off from that too.
Okay, what Mike's basically talking about here is basically the top up here to where we're currently at right now, where we had basically the fall down, which we were around the 19th is when we started our pullback here. We broke through the 23% pullback, and at the same point, we're coming back down to retest this zone right here for a potential push up to the 38. But if we compromise that 23, we're going to have more downside movement. So it's the key thing is what is it going to do around this area? Which if we go look at what I was talking about on this chart, on that pullback zone, I was talking about the 264 area as being the 38% pullback off of the pattern that we had developed here, which will be right about the exact same spot off of this push we had right here. So you look at that and we pull this back and just look at this small micro movement right here. You see we're at the 23 right now almost, but our 38 is right about here. And the 23 off of the big move is right here. So this is the area that we're kind of looking at for the stabilization. But you see where our 61% is way down here. It just has a little bit of good support grind resistance here. So that's why we're looking for a pullback in this range with room to here for the push. But the concerning I have once again is if Trump says something Sunday night, this thing could hit these levels and start taking off. But the key thing is this line right here. What's it going to do with that? We're going to come down and bounce off of it, or we're going to break through it. If we bounce off of it, we're going to start moving back up. If we wind up breaking through that, we're going to start flushing. But we've also got to look at the trend that we basically have created right here too. Is when we hit this area and break through that, it could come back down to here and start this back and forth crap. Really, this is the key area for the sell-off. We start breaking that trend that we're kind of starting, because we're basically creating a new basic trend channel right now. As far as the prints, let's pull up the prints. The last one that came through last night was that one that came through last night was the last transaction that came through, which was a 270.32. And hold on, it's taking me a second to get this pulled up here. We had a few transactions at 271.48. It also came through last night, almost in after hours. So we had some movements happening up in that area. And then the 71 is the one that we had the majority of the transactions coming through right around that ballpark. And yesterday we had a lot of traffic that came in. And these are all the late prints that were coming in from yesterday's close and showing on our bottom. So this is pretty much the range that we have right now with the dark pulls that we're setting into right this moment. We had a few of them that were in the 53 that was kind of working our way up. So we have another light bottom, you could say, it right around there. You can see how they're stair stepping us up. So these late prints that we got in that came in could be the topping part for the pullback, could be a little bit of the profit taking they're taking off of it. It also could be setting up for a continuation too. We don't really know until we see ourselves trading above the level if it was actually where they were doing the continuation or the sell-off. We're currently trading below it. So right now we have to assume that they did a little bit of selling off into the close last night for the pullback, which is all this is really telling us right now is that we're range bound. But we played this pattern right here yesterday, almost perfect for it to pull back. So Trump doesn't say any word. We should come down to these levels. We should test that 23. We should come down, potentially test this trend line area. But look at a different scenario. What is actually happening with a nice healthy pullback? Say we have a pullback over here. Let's go out a little bit further than just from that spot. You see how we're breaking trend here just lightly. Or trying to anyway. Didn't quite break the trend. We came right up to the top. Now let's look at this. Has a potential. We could see something like that developing. Now going this high isn't going to happen. It'll probably be more realistic like down here. We got a whole lot going on. Technicals are starting to build up in this area. And because we're at the 38% on the 09 level, we're close to 100% off of the 18 level. We should expect, because more so than not, when we get to these significant levels that matter the most, we start seeing development of patterns like this. And why do we see these patterns develop? Because they turn into consolidation to build up pressure, and we have the back and forth action of the stock moving back and forth till it finally makes a decision to either break out or break down. So we're somewhat playing into more or less we want to play the impulse legs because we're day traders at an intraday level. But there's a bigger pattern here. There's a bigger pattern that's being involved right here. It's developing. You know, so we want to play as much of the legs as we can to make as much money off of it. Because, I mean, we're talking about big swings back and forth, but this is more or less for the market in general and the sentiment of the direction, whether we rally back up or we wind up flushing more. When we get to these strong areas of support and resistance, we should see these type of patterns start taking place for the buildup of the pressure. So we need to just start looking at more or less where we stand right now. We got dark pools down here at the bottom. We got dark pools up here at the top. Key thing is we're going to pull back and break over. There's nothing saying that this dark pool prints we got, and we didn't have tons of it into the close yet. We will know more tomorrow as they start flowing in, or Monday. If they start really loading up, we start seeing more, then they'll probably be bringing us down. But we could come down to this area, the 23, like Mike's talking about, and we could start looking for a bounce, could come down to this trend line and create a bounce to eventually break through. There's nothing saying that we can't get an effect of where we started here. We hit this area, we either look for this or potentially just say we stick with the trend line, and then we wind up bouncing back up, and then we wind up breaking through, and then bounce back up, break through, and just slowly just kind of start making it to where we could basically have bigger swings later. There's nothing saying that this can't occur for the pattern to still play out. We just got to kind of start paying real close attention to it. And we're going to be in an area that we're going to start seeing big picture consolidation, but intraday is going to look like big swings to us. And we just got to look for where we think they're going to take us based upon where they have the floor and the cap. So they could basically be selling a little bit here, taking profits off of this. They could also be loading up here because they know it's just a dip buy for it to push up a little bit higher later. You know, so key thing is when we start seeing a whole lot of the volume coming through, we start seeing massive late prints. That's when we can tell what they're going on. I didn't see an overwhelming amount yesterday compared to what we had back when we had this bounce over here. But look at the overall picture, more or less where we're at with the stair step effect. What do we really have here with this? We moved down for the market, we pulled up, we're coming down the market, we should pull up, we should go back down, right? That is also a very good possibility that we could have until we get stabilization. And we're over here worried about these little things when this could be the actual thing. We have basically a gigantic Elliott wave that's taking place.
Yeah, I just find it really interesting how the dark pools pretty much line up with the pivot points on the harmonic patterns.
Well, pivots are just support resistance from the past that is kind of somewhat calculated for where we're at currently. But if you go back and look at the past, they were just former support resistance lines. And history repeats itself, basically.
Yeah. Well, I didn't necessarily mean pivots as in the tools. I just mean like at point A, you know, there's a dark pool, and then on the D there was a dark pool where it came back down. I just find it interesting.
And for us to have a decent pattern develop here off of this big pullback, we really need that 38%. We really did need that 38% for us to have anything. We want to kind of measure from here to here and say we want to have this be our top, and we want to make this our bottom, make it our A, our X to A, and we want to make our A to B. We can't stop here. We can't really stop here and be really that great. We can somewhat, but it's much better if we actually can get it up to here. Well, we can get it with this small pattern drawn here, but if we're talking about the bigger picture is what I'm getting at. Let me do this here. Move it in a second. If we use the more or less the starting point up here, we have to have at least a 38% for some sort of pattern. When we look at it more or less where I just drew it a second ago, and I'm grabbing this right. There you go. We pull it here, then we're within the parameters right now of that B being fine, because you see the B is actually 43. So that could actually be the topping point for a pattern that's developing right this moment for a pullback. And it could come up a little bit higher. And the key thing is we can measure this and get an idea we got a pattern starting. Finding the C leg is the difficult part, because we never know if the C leg is where it's actually going to finish landing. We don't know if it's going to be like real tight up here around a 38% also, or it's going to be way down into the 70s or the 80s, or even come down further down to the 120s or so. We never know exactly where this is going to be at. But once we see this area and where we see it stabilize, like a nice pullback to that spot, then we can measure this a hell of a lot easier, because now we've got enough data that has given us an information in order for us to have the next push. And we can say, okay, I know that I see that this thing is going to basically give me this type of a pattern. And I know that it's going to run up to where it should run up to for the completion of the pattern. So we can measure this area a lot easier. And this is the reason why when we're calling out these plays all the time, we're so accurate off of this, because we're able to identify, because we've got enough data now to go off of to be able to make a projection. But whenever we're just trying to do the first stages of a pattern, it's a crap shot. We don't really know where this is going to be at. So we have less likely, because this is going to make a difference of where this is going to wind up being. So we have to basically to wait for the development of the stages to appear and be patient. And so I'm okay with letting a stock pull down into this area and like, oh, I missed all that money, because I'm looking for this money over here. This is what I want. I don't give a crap about this petty cash. I want this wealth over here. Because once I see this develop over down in this area, I'm like, okay, now I'm making a hell of a lot more money. I'm making double, triple what I would have made off of this little tiny petty play. And then I turn around and make more money, because I turn around the position and say, okay, now I've made all this money. Now it's time to come back down and make the same amount that I made over here. Would have made over here. So now I've made that same amount and I've made this. There's nothing wrong with trying to do this, but you know what? This becomes more of a 50% play. This is a 65 to 90% play. This is a high 90% play. So I'd rather play safe and make a hell of a lot of cash than over here worried about where the bottom is at over here.
Hey, Darkside.
Go ahead, Jay.
I'm sorry I'm late. I don't know if you were talking about it before, but this setups we are talking about right now, this is within the limit when the market is normal. Right now, there's nothing normal about the market, and everything is going down. The economy is going down. The companies are firing people, laying them off, until we start putting our feet back on the ground again and to see the normal things stabilizing and stuff like this with the virus and all that. So will this setup still work when we are in a different kind of market?
They work in all types of markets. The key thing is that we've got to watch the big institutions of where they're playing the money, and that's when we can make these projections. While they're pushing the market down, you have no setup. You just got to go with that flow. So we will get stabilization. We will get a basing area. We will consolidate for a long time before we ever go back up. Our little pops that we get are just more or less patterns that develop. They're not necessarily, oh, this is going to be the correction. We're going to start moving up, and we're going to continue moving up because now we're getting a reversal in trend. Well, as long as we're in a downtrend, we're going to stay in a downtrend, but there's patterns within inside of the downtrend that you can play. And there is reason to the madness. And this is how these markets move as fast as they do on the downside because of the fear factor, because everybody is so afraid that what's going to happen. I mean, the world's not coming to an end. We will go back to normalization eventually. It's just a matter, is it going to be next month or is it going to be 6 months down the road?
Can I ask a kindergarten question here?
Yeah.
So, I understand why you don't want to play I guess it's the B to C leg, because you don't know where C is, right? But once you've confirmed the C to C, and you can ride D up, then the new pattern drop is sort of a natural progression, right?
I don't know exactly what you mean by that.
Well, so you drew those arrows and you said you don't give a damn about playing I think it's the C to
the B to C leg, yeah.
The B to C leg, right, because it could be choppy as hell and tough getting there. But once you've had confirmation on what C is, then it's a smoother ride up to the D leg, and you said more money to be made, and then you drew the arrow back down, I guess, assuming it starts a new pattern.
No, that is the completion of the pattern. That arrow down, when we have a pattern that develops into something like this, and then we push back up. Now, this is not a completed pattern. Do you see that it is stopped here at D? No.
Yeah.
So it's not. It's only completed once D's completed itself. Once it's completed itself, technically, you're not supposed to play this at all until you see where D's at, and then you take it down. That is the correct way to play it. I don't play that way. I'm like, well, hell, why can't I make money while it's developing?
Check.
Well, right. I mean, that's the stronger momentum too, going from C to D, right?
It doesn't look like it's working. Can you guys hear me?
Yeah, I can hear
Yeah, we
you.
can hear you fine. The completion, the patterns that we're playing, we're all intended to wait to maturity before you play them.
Right, I understand.
But they basically have the ability to make money because you can see, and you got enough data before it happens. It's like you're being a weatherman, and you're like, hey, I see there's a storm coming. I've got a percentage chance that it's going to make it to this town, and do it. I mean, it's not 100% guarantee, but once you have enough data, you can get a pretty decent prediction at that point. But when you're over here doing it too early, you're going to look like the weatherman. You're going to be wrong all the time. So you need to wait until you actually see the storms rolling in instead of trying to do it 3 days out.
Right. Okay.
Well, and the other thing I wanted to say on these patterns, like obviously we see the patterns, we go to play them, but keep in mind, these aren't set in stone. If Trump comes out, on Sunday and announces something crazy, it can break that C point and keep going down. So like you've got to be watching what's going on in the market and making sure you're paying attention to more of the global events because anything can happen.
Well, right. I mean, and that's my question is like from the B to C is the risky play until you establish what C is, correct?
This is correct. But at the same time, this is a big picture pattern that we're looking at for, say, a swing, because this is going to take multiple days to happen. Whenever you're trying to play it more or less on a intraday level, you can see what happened on an intraday level is that we have the one that played out yesterday.
Right. I see that.
So we were looking at this pattern yesterday. So it's basically a pattern inside of a pattern. So as a day trader, you can still look at something that happened in the last 48 hours and play it here, because now we've got a high probability of a pullback happening to develop.
Well, you also have a pattern that was just within the trading hours yesterday too, right?
Yeah, we have one right here.
I can't wait for that class, Darkside.
So you got to look at it at multiple layers and stuff and say, okay, how are they building this out? Because everything is more or less, back and forth, until they finally get the big pinnacle point that is going to really start moving and stuff. And so as a day trader, you look at intraday, you look at a couple of days back, to make your day trade. When you're looking at swing trading, then you look at, okay, where have they taken this market in the last week? Where do we stand from week to week? For the bigger picture, how things are going. And to think that we're going to go back up to these levels, this is not going to happen. I don't see that. I think we're going to have to more or less grind a little bit. That is like wishful thinking at this point with the sentiment of the direction that the whole economy is going right now. And I'm still looking at we're holding trend here. So for us to have a bigger picture move, we need to break out of this trend, and we need to break above this level. So for us to have any type of starting to see stabilization in the market, to start seeing we're going to see some good basing big picture wise, we need to have it more or less where we start coming down and then we break out of the trend and hit a decent Feb area to come back down for a bounce. I don't see that taking place yet. Until we start breaking that trend, I have to assume that we are going to look at it as that we are just stair stepping right now until we have a reason to actually see a bigger pattern take place. Because this pattern that I'm looking at here is more or less wishful thinking, because we haven't broken trend. We need to break trend in order for us to have a quality pattern and stuff. So we need to start looking at a bigger picture move of how far can this thing really go between the actual previous history points. And that's where we're at, pushing close to 100% level over here. So when we start looking at it in a bigger perspective, where do I need to kind of go from our 09, if we're measuring that as part of our tool, to actually take place? Well, let's just get rid of all this junk. Let's say that this is our low point and we got our high point. We know that for a fact. Can this be the low? Yeah, that's the first stages of a potential low. So what would happen here? Maybe a pullback to this level here for another drop. Could happen. That's a bullish pattern. But how far bullish are we going to be before we be bullish? How far is this leg going to go down before we wind up stabilizing? Well, 2-3 years out. So we could be developing into something like this. We don't know yet. We can't, because we don't know where this is at yet. This is just stage one of this. Where's stage two at? Could be here, could be down to 61%, way the hell down here. We could see something like this develop in the next 2 to 3 years. which would be very realistic after such a tragic event globally on a global scale, is that we could have this come down, stabilize at 61%. We start rallying back up. We think we're doing good. And just right when we get close to the top again, we just pulls us right back down. And what do we wind up doing? Turning into a sideways market before we start breaking out.
So at what point is your stage 2 confirmed?
Once we start seeing trends break, we're breaking trend of the overall of basically the first area from X to A. We're starting to break that trend line now. We're damn near testing it or breaking it. We're kind of over under right this moment. Once that breaks, the downside needs to start setting into where we're going to start seeing the pullback, and that's where we need to see that stabilization for B. So trying to figure out where A and B is really hard. It's easier than trying to identify where B to C is going to be, because why it's easier is because we are just basically just going off of one thing, all-time low and all-time high levels. We know that we're going to hit one of these levels and bounce. Which level is it going to be that we're going to bounce is the key thing. We already broke the first level of a strong continuation. We're still at secondary level for continuation. So our economy can be saved to where we're at now. We start breaking that, that's when we start going into a sideways chart for a while. We start breaking this 38. This is why the government is trying to stimulate us as hard as they can right now. They see this. They know this. They know that they break this level right here, that this is going to take a lot longer than an 18-month recovery. This is going to possibly take a 5-year recovery. It took us forever to move up. We can't assume that we're going to be fixed as fast. We're moving into a long time to go up, a long time, we come down, and it's going to take us a long time to make the pattern for us to be able to go back to higher highs once again. But at the whole aspect of it all, when you look at the big picture of how much the market has moved since we started watching the SPY, have we ever compromised low? We did in 09. That's why everybody was so scared. The only time that we have compromised it since we started following the SPY like we have been off of this level, the only time that we compromised was right here in 09. And this is why so many people were scared. We've got a long way to go before we really have to worry about the floor, don't we? It's because we ran up so much. This is where people get scared, just like they got scared back here. And everything came into fruition just fine. We would have broken this and stayed and continued trucking down. We would have had a whole new system that would have taken place back in 09 that has never happened in the history of the market. We would have started breaking down levels that we have basically broke the uptrend, because we've always been on an uptrend on the market since the creation of the market at one point form, big picture wise. Which, once again, you have a pattern there, but did the pattern complete itself? That's a bullish pattern right there. And here we have the result. So,
can I ask something off topic of this?
Sure.
Great. So can you explain open interest? Because I've been tracking it.
Open interest is basically the contracts that are open and pending for closure. Basically, the contracts that are available that you could get out of your position liquid. So when you look at open interest and your options network, you see we don't have open interest in equity because it's you basically buy something, you own it, or you sell it and get rid of it, because we don't have expirations on equity, so you never would have the open interest. So with options, you have an open interest of saying, hey, I open a contract and I haven't closed it yet. So those are the pending contracts that are waiting to be closed before expiration or at expiration. So the greater open interest that you have is showing that you have higher liquidity in that strike, because you've got more people that are trading in there that haven't closed it. Because once you close your position, that open interest number goes down by 1 digit, or by per contract that you're doing, per contract per se. Those are how many contracts that are basically outstanding at that strike right now of liquidity. So you don't want to play a strike that doesn't have any open interest or has a very low number in open interest, because you're going to be in an illiquid stock or illiquid strike that's going to be hard to get out of the position. You're going to have to wait for someone to come along and want to take your position. Where if you have high number in that open interest, it should be pretty liquid where you can get in and out pretty easily within a reasonable amount of time.
Because I was watching the ES futures, and on Friday it was increased. Picture. I don't know if you can see it.
Well, I guess explain to me what it is. This is kind of small print. I'm trying to read. My eyes aren't that good. Let's see.
No, it's just showing that the open interest was going higher throughout the week, and on Friday, I mean, that was to me, that was a big jump.
Well, you should see.
Mm-hmm.
You're going to see the open interest start diminishing off of the March expiration. As we start getting closer to expiration, because people are going to be getting out of their positions and rolling their positions over to June.
That makes sense.
Because the 20th is the cutoff this week or this month.
Okay. It's just fine.
Which is why we're at the point now where, as a day trader, playing March is still okay. But you need to start looking at moving into June now. Most people are going to start flipping this week over to June that haven't done it already, especially long-term positions.
We also noticed on Friday that the June price point was closer to SPY as far as falling toe and toe.
Yeah, you're starting to get more liquidity over there.
So on the futures, on the micro, like the June, for instance, since everyone's gonna be switching over to that, if you're wanting to draw like your fibs from like the daily, like a long-term view, would you put your low point, like, because back when it first started trading back in like June of 19, like there's not really any volume, there's just points. Would you start your fibs way back there, or would you start it from a different point?
From where we're currently trading with the whole market?
No, on the futures chart.
Oh, the futures chart. Okay. Yeah. Well, since we're getting some sort of this is even kind of tough because you see how the futures is just coming down here. But if you're expecting the bounce off of it, then you would basically just go from your swing high, your swing low. But with the candle setting up right here, it doesn't really look like it is necessarily for sure a bounce, because on a daily level, because I mean, it's technically a reversal candle that's happening there, but that's about all you got, is you're just going off the candlesticks.
but you wouldn't bother drawing anything back like I said, the beginning of June of 19, like from that low point to the high.
You're already breaking below that. So when you were starting to see the fall apart, then you could basically use that
Well, and to do this, dark side,
as the pullback here.
type in ME, well, you can do the ES, but do ES, and then do that, the continuous, the 1 apostrophe, the very top one, right there. Yep. So that gives you more data. I just posted a picture in chat because I was kind of looking at the MES 1 apostrophe and then the ES 1 apostrophe and the SPY. So obviously the dark pool prints are coming in on the SPY. So should we be drawing our lines and where we think the market's going to go off the SPY and then use the ME, use the futures for the intraday traffic, or would you still use that chart for long-term trend as well?
I use a SPY as my primary chart following what the market's actually doing. And the futures is, to me, is more or less filling in the blanks when the SPY is closed. It's filling in it's giving me an insight of a little bit of early traffic starting to move in the market, because as soon as the future starts moving, the market will follow suit. So we got the prints and we got more data on the SPY than we do the futures. The futures technically is the SPY, but it's just kind of like predicting where we're going to be going as a possibility over this quarter that we're trading in. And so the lines and support resistance should be respected on both sides of the fence. If it's a SPY level, then the futures should respect that same level. It's just that, you got the decimal point differences that you got.
Well, yeah, and then you also have the contract differences. So like if you look at March versus June, March hit that dark pool print and June did not. It went past it like 10 points. So there's also some differences there, which is kind of, I'm just trying to figure out how to factor in all the
usually the futures, when it moves past these points, pulls past these points temporarily, and then it snaps back to basically reality, to wherever the SPY is taking it out and stuff. So you want to play on the chart that you're trading, but you still want to look at the overall support resistance off of like what the SPY has been giving you as areas that you need to keep in the back of your mind that the futures need to respect. So with this future area, if you're looking for this pullback, I mean, this right here would be the first area. You see this nice dip back here. Where were we at? Exact same time frame as we were on the SPY, right? So on the daily level, you're going to be wanting to measure from here to here for your pullback to start with. And now that we're compromising that level, you're going to want to go down to here, which where are we at? Exact same information.
That's pretty close.
So they're going to be within the same parameters, but if you're wanting pinpoint accuracy, you need to be on the actual futures chart. But you got to realize that the two charts are going to be pretty close, and you're going to have more data support resistance off of the SPY, because that's where the equity is at and trading at. That's where your dark pool prints are going to be at. So you got to realize, okay, they're doing something over here. The futures are going to basically respect those levels to a certain degree.
Hey, Darkside?
Yes.
Getting back to the harmonic that you were talking about, when you made that call on Thursday, that awesome call, by the way, for SHOP that went 20 points, were you looking at a bigger picture harmonic on the 15? Is that what triggered you to get into that one?
Man, I slept since then. I don't remember what I did.
And I know, man, but it was an awesome call.
See if I still got the drawings on it. It may have been on another chart. I got a couple other charts. That was just the break of the 23 on the pullbacks. All that was. Yeah, and yeah, you do have a harmonic that's developing right here too. So you have, you got a small one that's pushing up here, but you're also looking at, you're breaking the 23 and you're pushing. You had to pull back yesterday's low, or not actually, that's Friday's close. Take that back. That's a problem when you start going too far back. You're starting to mess with previous data. So the 23% pullback right here is what I was pretty much going off of for the run up. But you see, I saw a curling bottoming down in this spot too. And yes, it is a form of a harmonic that's developing here off of that. Because I mean, I'm constantly looking at these, and even if I don't draw them, I can kind of eyeball them in my head enough. You see, technically, this thing should have gone up higher, but you really can't expect the way a lot of times the way the market's running that you're going to get past that 61 sometimes. So that's why I call it the spirit of the pattern instead of the true pattern, because we should be pushing up to these levels off of a pattern like that, not down this low. But I make the calls a lot more conservative on these plays a lot of times, because I know that more so than not, they like to play games with us and not complete the patterns like they should.
Appreciate it. Thanks.
I have a question on the SPY. If you could go back to the chart intraday over the past 10 days. It's more a micro question. I have an observation based on 2 points. When I look at the last 1.5 hours yesterday, this pullback in after hours, it reminds me of the pullback that we saw 2 days ago from Wednesday to Thursday, which then was followed by this dramatic gap down. And then I look back a full week to the last Friday, and I see the similar pattern. We see this crazy spike into the close over the last 15, 30 minutes, seemingly out of nowhere. And then it holds for a while, puts in another peak in after hours, and then fades into the weekend. And it's fully within the patterns that you laid out, but this experience from a week ago, just knowing that a weekend gives everyone 48 hours to digest all the facts in all their beauty and scariness as they develop. So that just makes me wonder, do you pay attention to these patterns, or I don't know how to call it? Would you factor that into your expectations, or would you say, hey, this is so micro, we can ignore that. Let's stick to the patterns that we see?
I use as much information as I can get. But I look at some things will overweigh others. I mean, when we had that pullback the other day and popping up, we had the sentiment that the sky is falling, things are going to get worse, we're going to drop more. I even had a student that was over here arguing with me about saying that we're going to plummet Monday. Okay. What I look at more or less is we look at it as the direction of how the patterns are doing, the technical side of it. We look at the news and sentiment to a certain degree, but you also have to pay attention to the institution buying and selling of the money flow. And you got to look at the situation of all of it matters. Which one is more likely going to be the one that's going to have the most weight behind it? The big money isn't there to lose. Not when it comes to the dart pool side of the business. They're the ones that are pushing us around and stuff. So when you have something like we had over here with a massive amount of traffic, more so than any other time in history coming in, that's telling you that they're trying to push this back up, even though we've got a downside trend. Because what becomes support, we have to have some buying pressure come in to push it back up. Otherwise, you just have a free fall. Once you see stabilization of the money flow coming in, you will get the directional change, along with looking at patterns to see if this is a right opportunity. Does the area make sense that they're going to bring it down to make sense for a potential bounce? Does the technicals line up for it? If you see good reasoning behind it and thesis behind it, and you get backing up with the money flow, then you got to go with that. The hysteria that you'll hear inside of the media is not a prediction, it's a reaction. You know, people are just going crazy about things, and they're talking about, like, a lot of these individuals. I'm sitting here just watching the commentary on CNBC of like, oh my gosh, we don't know why this is happening, that's happening. And it's like, well, if you just pay attention to technicals, pay attention to the money flow, along with the fundamental side of the business, you'll be able to make a better prediction. But when you don't see all of the picture, you can't make a very good logical decision. You got to use each individual item in order to make that decision when you're going to make it. You know, you can't just have half of a puzzle and figure out what the picture is going to be. You really need the whole you need all the pieces. You know, so these areas that you see happening, you got to pay attention to money flow. Doesn't necessarily mean that that's going to be my biggest decision, because how heavy is the money flow? If it's massive, then I'm really going to be paying more attention to it than if it is normal or maybe just a little bit elevated, because I'm also wanting to see patterns. I'm also wanting to see trends. I'm also wanting to see segment of the overall direction and stuff for us to have a potential change, because we don't know by the money flow for certain if they're buying or selling until actually it's a little bit too late per se. But based upon history and the flow that they usually do traffic with and how much money they're throwing at something, usually is going to matter, because it doesn't matter that the world's coming to an end here. If you got enough money you can throw at something, you can push anything around. You know, so we can come in here and say, as technical traders, it must do our pattern. But if we get like a Warren Buffett come in here and decides to dump his whole portfolio into that one ticker, your technicals don't mean a damn thing. That stock will move against you. So you have to pay attention to the money flow coming through, because that is going to trump everything. If you get somebody in there that is going to go against that position and has a bigger well in the sea. So you got to pay attention to the flow of traffic along with it. If things are just going as normal and the activity is the same, you got average amount of volume with the money flow coming in, your technicals are rock on all the time. They play along with that flow. But when they decide to say, you shall not pass, and we're going to dump in everything we got to stop you, I guarantee you're going to be stopped. So you got to pay attention to a lot more than just lines. You know, you got to pay attention a lot more to just hysteria in the media. You got to pay attention to also the flow of cash that's moving around in the market.
Kind of along those lines, Friday, when Trump was speaking and you were kind of monitoring the S&P as it was taking off, I have a question for you on that. What instrument do you trade when you're looking at those momentum swings? Would you advise someone to like maybe look at Apple or something like that to trade that long at that case, or are you doing futures, or what do you think on that?
Anything that's heavily connected with the SPY, Apple's not a bad stock to consider for that, because they're the second largest ticker in the SPY, and they have more volatility movement swings than Microsoft, which is the largest right this moment. At least it was the last time I checked. It may have changed in the last week or two, but the last time I checked, that was what Microsoft was 1, Apple was 2, and Amazon was 3. But that changes, you know, all the time. Those big tickers are usually going to be the ones because they have more weight to move the SPY around. when it comes to it. But if you get enough of the tickers out of those 500 tickers start moving the same direction, then you'll wind up getting to the point of they could trump Amazon. They could just totally knock it over if Amazon's like, no, I want to do this, and then all of a sudden 500 or 499 tickers want to go and do the complete opposite. It's not going to matter. But if majority of the tickers go the same direction and you got the heavy hitters moving the same direction, you'll get the flows. So Apple's not a bad one, but if you're looking for range and real quick movements and stuff, then any ticker that's been following the SPY, whether it's related to it or not directly, as being part of the S&P, having just the sympathy of moving with the direction of the market can make you money and stuff. So look for stocks that have range, but also within reason that you feel comfortable playing. That's not just going to make your head spin because they move too fast for safety purposes. So something like Apple moves slow enough that most traders can trade it without having to freak out when it makes a dramatic move. But if you get into something like Tesla, which has been moving somewhat with the market, but can have its own catalyst at times, and makes one little small move, it could totally tear your account apart. So you got to use something that makes sense, that's within reason. Futures is a good thing to play intraday when you know that breaking news is going to come out, because they move before the SPY moves. You'll get an extra few seconds of an indication that something's going to take off. They will keep it close. The market makers will not let you have much of an advantage of saying, oh, I'm just going to play the SPY once I see the futures move. Well, by the time you react, you're probably going to be too late. They tried to keep the market within a reasonable amount of similarities, so you can't use one instrument against another to try to have some sort of advantage and stuff. That's the reason why when we see the futures make a pop, we see the SPY make a pop off of that. So you can use futures. You will get a little bit of a head start there. You'll probably make more money in futures than you would by playing the SPY itself, just because of the monetary gains that you can make off of futures based upon a quick snap movement and a low amount of equity you got to put into it to be able to start it off.
Very good. Thank you, sir.
So, Brian, I was under the impression that you could play futures with as little as $50, but right now that's not true at all.
You need to reconnect. I can't hear what you're saying.
Yeah, I was gonna say I'm really having a hard time hearing her.
I think she's trying to say that you can play futures for $50 and stuff. Margin requirements on futures vary from broker to broker, but there are brokers out there that will allow you to play the micro for $50 intraday only. If you're going to hold overnight, you're going to have $500 to $700 margin account. Some brokers will require you to have the $700 to $500, $2,000. It all depends on the broker as far as what they are. It's independent, but the bare minimum is $50 by according to the rules that is laid out by FINRA.
Okay, I'm back. But you need, it's the SPY micro, correct me if I'm wrong, Josh or Mike, you need $850 per contract. You can't play with $50.
Off of FINRA rules, you can do it as low as $50. It depends on the margin requirements and stuff. You just go read the rulings off of it. Your broker will make the decision on what they do. That is the bare minimum that they require. Some brokers will require higher margins because of safety factors, but they can't go any lower than that.
Okay, because I know
I don't know that if you could get a contract for $50, it's very quick and snappy. You could lose your entire account, in one move. So I wouldn't recommend only having $50 in an account.
Right.
Yeah. I personally wouldn't be screwing around with futures unless I had a couple $1,000 in the account.
Right, because it's highly leveraged.
Yeah, so I have a cash account and a margin account with IB. My cash account is bigger, so I started trading futures this week, and I went back and looked. So I had 2,200 in my margin account, and now I have like 3,100. But I know for a fact with 2,100, I had no problem getting a contract. Now I don't know what the actual requirement is, because once I'm in the trade, I'm focusing on the trade. I'm not looking at what it took out of my available funds. So I don't really know for sure, but I know 2,200. I know you can get one. Might be
I
able to
know
get two.
Purdue said it pulled like one contract pulls like $850 in cash at IB, and then it's like $1,000 in leverage there.
Yeah, every broker is
playing-
different on how they handle it.
You're breaking.
Right. You're breaking up again. But I will say this: I did look back at one contract. It did pull the actual amount that one contract was worth that I was playing was like 13,000.
My futures account is $6,000, and most contracts I can pull is $4,000, because you still have to maintain the $2,000 margin requirement.
There are two different margin requirements. You have the one that puts you into actually starting the account, and then the initial margin requirement, and then you have a maintenance margin requirement. And if you drop below the maintenance margin requirement, they'll do a margin call on you. So the margin requirement on intraday is very low, but when you go overnight, that's when it goes up dramatically. That's where the $50 versus $700 range comes in from the rulings, because when you go overnight, they require a higher margin. You know, just like if you went with the ES, you would have to have a $7,000 amount of margin on the ES to hold over 24 hours.
And wasn't that something that they were changing the other day too? They were changing the discounted intraday margin or something. I saw some notifications.
Yes.
I don't know
So
if that
the margin
affected it.
requirements can be adjusted at any time by the broker at any means. They just cannot. They can always require more out of you. They just cannot require less out of you. Because that's FINRA puts a rule in there, and every broker has to say, okay, this is the minimum that somebody can do. But majority of the brokers out there will assess their risk factor of how much leverage is going to be put on the table, and they will make a decision from instant broker to broker of how much that they want to require. And it's frankly, it's just a matter of, well, you could go over to say TD Ameritrade and say, well, TD Ameritrade IB does it for this price, and y'all are so much higher on this. You know, TD Ameritrade say, we'll go over to IB and trade then, because this is what we do over here. They just can't. All the brokers have to be on the same playing field as far as how low they can go. They just can't go. They can go as high as they want beyond that, based upon their risk assets that they want to put into it. So therefore, you need to go and look at what broker you plan on trading with, and look at what their requirements are, so you'll know from broker to broker, because every broker is a little different. They just have to make sure that they don't go any lower than what FINRA says.
So on a swing trade, a question in the room. So obviously a day in the futures is 6 p.m. to 5 p.m. Eastern. So is a swing considered from 5 p.m. to 6 p.m.?
From market open to market closed on the futures network is considered when the margin requirements change. So once it opens, you have until the market closes to be considered intraday. Once the market closes, that's it.
So the swing is from 5 p.m. to 6 p.m. essentially, because that's when it opens back up.
As far as the maintenance close goes, I'm not sure if they calculate that as part of it or not, because some of the brokers will shut down at the maintenance and just not open up for that 30 minutes. They'll just shut it down and just stay shut down. So they're actually closed for longer than an hour. They'll be closed for an hour and 45 minutes instead. So it depends. That varies from broker to broker. Brokers that do everything exactly like the rules say, like what IB, for its the time when you can trade or like IB, but there are some brokers out there. I mean, like, you know how E-Trade and TD Ameritrade likes to not open pre-market, you know, when pre-market is open, you know, so there's brokers can make a decision if they want to be open, you know, that window or not.
Leanna posted the new amounts. She said it went up. I think it's because of that margin change that they did, but she says 1782 for intraday and 2228 for overnight. And of course, I mean, is that a fixed rate, or is that depending on the price of? It is a fixed rate. Okay, she said it's a fixed rate. And for those who didn't see my post, Pence is getting ready to do a briefing at noon. You can go to whitehouse.gov/live.
Noon Eastern time?
Yep, like 5 minutes.
Okay, am I still breaking up?
No, you're fine right now.
It must be a microphone. Okay, thanks.
What's your take on Boeing, like long term? Like if you're looking at it for something, maybe you're putting in your retirement account or something.
Wait until you see the base bottom. We're still currently downtrending. I mean, we got a nice grind over the last 2 days, but when you really look at the overall, we're still not breaking trend yet. Off of the downside move we pretty much had, we still got room to pop back up and back down. So if we get some stabilization in the market, then we can start seeing Boeing start chopping around and eventually start breaking back higher. Market starts pulling and breaking down to new lows, Boeing's just going to keep on going right down with it. So I look right now as Boeing being kind of at the bottom of the trend, because if you look at the backside of the trend line and stuff, you see we're kind of right here in the middle, and here's the backside. So we're kind of like in the middle zone right now with Boeing. I wouldn't be invested in it right now. Not long term. I'd wait until we start seeing more stabilization in the market first. Boeing will recover sooner or later. It's just a matter when. And it may take government intervention, but Boeing has a big loan that they just took out that will help them through it for a short period of time. That they'll have to burn through that first, probably before we'll see the government step in. And the banks would have to come back and say, Boeing, you can't get any more money for some reason. But look where Boeing came from. Since our crisis back in 2009. Been on a hell of a run. How much have we really pulled back so far in Boeing? We broke the 61 just the other day, and we're down here around the 70. So we still have room to come down to the 78, which would not be, there was nothing wrong with it not coming down to about $118 before it starts bouncing. Well, we got a lot of stabilization down in this area too. I don't think we're going to see a whole lot of investors think about taking Boeing back up until we start getting down in this little pocket area here. But I mean, they're airlines. We got to have them, because whether we have them and Airbus, that's pretty much it for the big boys when it comes to the airlines. And when it comes to the military, they're a massive defense contractor. They ain't going nowhere. I mean, government will bail them out if it comes to it.
Yeah, that was kind of my thought. I mean, Boeing's like the war machine, right? There's just no way they're going to let it fail.
Yeah. And I would prefer to see them bail Boeing out than worry about the cruise liners, just for the safety of our country. They're talking about bailing out the airlines and bailing out the cruise liners and stuff. So Boeing could be on the cards eventually. Also, I just think Boeing's going to have to drop the lower before that happens. Down here around 120 would be a good spot to start looking at it. 118, 120, around that ballpark. It's unfortunate that it's fallen this far. And when the planes eventually get back in the air, that'll give it a spike. That's probably going to be the catalyst that'll break the trend. I think we'll come down once the market stabilizes. I think we'll see Boeing come down. Say it comes down to 118, 120. It becomes the new floor. The market finally settles down. Get cooler heads prevail a little bit. I can see Boeing just basically just chopping around down here. I can see it coming down to here and just kind of just doing this stuff. And then eventually the planes get back in the air and then we push up a little bit. But I don't see it going back to, its 400s it was at. Or 350 before it fell apart? Yeah. So I don't see it getting up to that level until we see the market back at the all-time highs. So Boeing will get a pop eventually when the planes get in, but we're going to be a little disappointed because we were seriously interested in Boeing as far as because before we had this drop that started happening with the market crash right here. So where is it? Right here. This is where the market started going down. Now, let me pull up a bigger chart. Okay, planes go down right around here, right? We had the gap down. So we're on our year anniversary right now, basically. Boeing sideways, literally. I mean, yeah, we had a lot of beautiful swing days we're playing with Boeing, but Boeing went sideways. And then it takes the market basically to start basically crashing, you could say, before Boeing snaps through it. Because we had investors coming in here investing in Boeing, wanting to pop it back up to its high whenever the planes got back in the air. Where's all this money sitting right now? They either bailed out of it when they saw the breakdown, which would have been the smart decision to do, or they're bag holders right now. So we know that not everybody's smart enough to see a breakdown that they're going to bail out when they see that the barn's burning down. They're going to stay in it. So what is going to happen with Boeing at this point? We're going to see Boeing. Now that it took this drop, we're going to see Boeing eventually when the planes come back in. And let's just say we eventually do get the planes back up. What's going to happen? It's going to come up here and then boom, bag holder city, right back down. Because people are going to cut it if they can get close to their entry. Just to say, my gosh, at least I got my money back. And that's the best case scenario at this point in time. So once Boeing has a nice stabilization before those planes get in the air, hopefully, we can come in and we can play that nice little pop before the bag holders start selling, because the bag holders are going to sell into any pops they see. You're going to see some that are going to sell way down here just on a small pop. Then you'll see others will try to hold all the way back. But if we can even get this far up, this is going to be definitely a rejection level, because there will be people that are long-term holding that are going to be just happy that they got at break even. There'll be some people that will come in and will buy at the bottom and average their position down lower and then just get out of it break even also. And unless we wind up going into a war which more would be good for Boeing. Now, Boeing's just going to be probably just a stock that's going to have a range bound scenario coming in place for the next few years. I'd rather put my money in Apple for longer term. If I was looking at retirement, I'd rather have my money in Apple for the 5G rollout, or Verizon or something like that, that has the ability to knowing that it's going to have a massive gain over the next 5 to 10 years. Boeing, the longer term entry I'm looking for is more or less for something that could happen 3 months, 6 months, 18 months down the road for a good quality play. But it wouldn't necessarily be like, okay, I want to hold Boeing for 10 years until I start seeing Boeing start really hammering at this level here. Because there's a lot of money up there that is sitting there that you know that they didn't all get out. All right. Anyone else got anything?
Looks like they may be starting soon. They got the camera up.
Is it just Pence talking, or is Trump talking too?
It's the Pence, the coronavirus task force update.
Yeah. It's too bad the futures aren't going on 7 days a week, huh?
Yep.
They close it for a reason. They don't want you to be screwing up the market so bad, so Monday we can't recover from it very easily. And there's also a reason why we have that lockdown. Do you think we could have a lockdown on Saturday and a lockdown on Sunday, and we come back Monday morning over the weekend and we could be down, 10% before you even got your morning cup of coffee?
Well, I'm thinking this may be kind of a bad thing. I'm not sure, but like, why didn't they, during the announcement yesterday, if they're going to talk about coronavirus cases, they were all there, why not take that time to give updates? It's like, instead they talked about all the positive stuff, and I have a feeling that they might be negative.
Dark side, how do you see gold? I always thought that was a forward indicator of where the market is going, but it's been kind of trekking down.
Yeah, that one's hard to read. I'm just leaving it alone on this go around.
Well, there's gold futures, and then there's also gold, actual gold itself. Like I bought some gold from an actual gold company before, and it's based on the gold rate, and you're buying in a physical piece of gold. Well,
Josh, where do you live?
What?
Where do you live since you have gold?
I don't have any anymore. I got rid of it because it took forever to move up, and I sold it and put my money in the market.
He took that silver spoon out of his mouth and made some money in gold, and then now he's in the market.
So, but what I'm wondering is, if it's gold futures, as gold goes up, the futures of gold potentially could go down, because if the price of gold is higher than the dollar value, then your value of the futures could be less. I mean, I don't know, but that's maybe what I was thinking as far as futures are concerned.
I'm just leaving it alone because normally gold goes up whenever the market's in a recession, and usually that goes up, and then also the bonds is usually the safe haven. It seems like right now gold is usually the go-to whenever bonds are kind of iffy and the market's iffy, but right now it seems like the bonds are more being affected right now than gold is. So, which tells me some positive thinking there. Why I'm saying that I see something out of this is that there's some sort of crazy belief in our government, or at least in side of it, to be able to buy bonds, like because the bonds are basically backed by the government. So it means that nobody thinks the government is going to fail. When people start running to gold, they usually are worried about the government falling apart. because if there's a new government that comes about, I mean, not that the U.S. has ever had this problem since we basically took this land over, but if you look at other areas of the world where the government's failed and the old currency becomes worthless and the new currency of the new government taking over becomes the new prominent. Well, if you had gold, you can just convert it. That's the reason people run the gold, is because if a government falls apart, the gold has some sort of standard still, even though we're not on it anymore. There are still a standard somewhat out there, and you can convert your gold into the new currency of the new government. And there seems to be not a massive worry about us falling apart right this moment, government-wise. So that's a lot of the bonds have been doing a little bit better this go around. So if I saw gold moving up, I'd be playing it. Since the gold is just kind of sitting there, I don't see enough range there to jack with it. So I'm just leaving it alone. Doesn't look too bad on the actual ticker itself, but that ETF looks horrible. That's the thing I don't like, is why does the ETF look so bad? And we got ourselves setting up here too with this.
Yeah, it looks like the ETF is the exact opposite of this.
Exactly. That's why I'm not messing with it, because I usually trade the ETF. I don't usually trade this ticker. This is a CFD of it anyway. But that kind of looks like it would reverse because this is a technical pattern. So, and you're coming up to a potential. A lot of people don't even pay attention to those type of patterns. A lot of people just say, "Oh, look, we've got more or less a flag sitting here, or at the top of the flag." So I wouldn't be chasing it right this moment. I don't like how these look completely opposite of each other. Something's not right. So as a day trader, I don't really care. I just play what's hot, has a great range right now. I mean, just playing the SPY alone or the Qs alone is good enough. If you don't want to be just stuck with specific tickers and out there, because really we're in a market right now where do we really need to be playing individual stocks with the market moving so well as it is? You could just be playing the SPY. There's a lot of times I don't like playing the SPY whenever we're kind of stagnated and going sideways. And it's like, okay, let's find the hot stock of the day that has some good news on it. It's going to give us some great range. I mean, that's kind of our standard everyday trade, right? But right now, we don't have news that's really trumping the market.
Yeah, I agree totally.
Why play individual tickers? Just play the whole damn market right now.
And what I've found is that when you're trying to find all of the news and look for the stocks, and you're always chasing something that's already moved, that's hit your scans. So when you're looking at the market and you're looking at futures, you've already got your ticker picked out. You're just waiting for the setup. It's so much less like you don't feel like you're running around like a chicken with your head cut off trying to find all the movers.
Well, Darkside, you said something about, Boeing coming up with a war. And while we were trading in the market, nobody was paying attention. The media wasn't even reporting the airstrike on Iran. And so could they be cooking up a war so that way they can get Boeing back up, since it's such a big part of the GDP?
I'm not worried about a war. I mean, this is just same crap that happens. Look how many times Israel gets shot at on a daily basis by somebody. We just basically are just saying, shoot at us, but if you kill one of our own, we're going to retaliate. You know, that's all it's coming down to. Trump doesn't want to go into a war unless we were forced into one, but he's not going to basically say you can kill an American and we're going to put up with it. You know, because I mean, they've shot our equipment down with drones and stuff. He didn't do a damn thing about it. But as soon as they kill an American, that's when he retaliates. So neither side, I think, really wants a war because it's not going to be good. You know, but that's a little shooting missiles back and forth at each other. You know, throwing stones back and forth at each other is not going to make Boeing go up. I mean, we'd have to get back into something like back into the Gulf War type scenario like we did earlier, or Vietnam or something like that to really get Boeing fired up. We got to have that machine going and stuff. And we're not in any form of that yet. Years down the road, we could be. But right now, it's not at that pinnacle point. Right now, it's just
and
terrorism, basically.
The way things have changed, don't you think they would be focused more on drones than they would airplanes?
No. Oh, Boeing makes drones.
I wonder, are they the main provider of that, or are there other companies that would compete in that market as well?
I have no idea on that part. Yeah, probably talk to a Boeing employee.
I think one of them is Lockhart, I think it's called.
Lockheed Martin.
Lockheed Martin.
Yeah, they're one of the Lockheed and Boeing are probably the two biggest defense contractors out there. There's other ones out there also, but those are the two big ones. It's kind of like Airbus and Boeing are the two airline, for civilian planes.
The thing with the oil too is I think they're also adding to the U.S. reserves, so it's probably not going to affect the oil too much.
Well, this is a good thing that we're filling up our reserves, because we've had the reserves that were pretty dry back in the early 2000s. Bush started filling them up. And when we had the $4 a gallon, we basically started going into the reserves and utilizing some of the reserves to kind of set back the price so it didn't kill us too bad. I don't know since then have we been filling those reserves up, or we just kind of just left it alone. But tapping filling up the reserves once again is a good thing, because I don't think because we saw $4 a gallon gas is a one in a lifetime chance. I think we'll be there again someday. And if we have these reserves, then whenever that crazy gas prices starts going up to those numbers again, at least we got a little bit of a buffer to work with for a while.
Yeah, I just saw a little news clip across the bottom that Trump was filling the reserves back up to the tippy top.
Yeah, I don't think we've seen the last time we're ever going to see $4 or $5 a gallon. I'm really surprised we hadn't gone back to it.
How much is the barrel now?
Around $33, I think.
33 per barrel. That we're talking about come down to 14.
Yeah, I think they said it's possible that we can get to 20. They
Right.
said some of our oil companies can sustain $20. They would just put them in a really big pinch. But there's a lot of smaller companies that won't be able to handle it.
Right.
Well, if you draw a trend line off the monthly oil futures from 2008 over, the low point on the trend line is around $21, $22.
Meeting of
Trump's on too.
Coronavirus.
We're definitely at a low point. So we got that low point over here. So we haven't quite hit it quite yet. We're damn
Dark
close
side,
though.
do a trend line from 2009 and run it over.
This is a horizontal one?
Yeah. or a slope one, I mean, I guess. Connect the low from 09 to 16.
Yeah, we got a little bit further to go. I think it's got a little bit more of a dip here, but it's
Yeah.
pretty close enough.
What I get is around 21, 22.
We also been kind of on a slope right here also.
Yeah. I think that's why oil rejected there back in 18 where it topped out.
Makes sense. I'm not seeing a real clean pattern out of this, though, other than just this flag here.
Yeah.
It almost looks like eventually we're going to come up to a pinnacle point where we're going to have to break out. We really can't have, we know that oil can't get down into single digits because the sides, their break-even point is down in the single digits. So we know we're not going to probably get past $10. But we're probably going to see a nice dip buy opportunity here. It's going to start popping this thing back up soon. I don't think this thing's going to last very long. Maybe another couple of weeks with them. I think eventually the Russians are going to cry uncle.
Well, I think it's just trying to make it too expensive to actually produce oil. It's not about,
Well, yeah, that's the shops. They have different levels of pricing they can drill at. I mean, they have a $30 price. They have a $50 price. They have an $80 price. It makes a difference on, there's an expense level that they measure out and they can pull it out of the ground and they'll just basically say, okay, we're not $50 a barrel. We're at $30 a barrel right now. So shut production down on the $50 drilling and let's move to the $30 drilling.
Right. It's just trying to eliminate the fracking that we're doing and the Russians are doing.
The key thing I'm concerned about this is I'm not too worried about the gallon of gas at the gas stations right now, because obviously that's dropping where our gas pumps should be going lower. What I'm concerned about is people becoming unemployed. And for us to have a fast recovery, everybody has to stay employed. Once we start seeing that the employment records are starting to climb, that's when the recession will kick in. We can't have that. As far as having a fast recovery, it'll be a very slow recovery once people start losing their jobs. And I'm concerned about the oil with this. Now, then buying back the oil for strategic reserve is going to help that. But all these small little businesses in the oil industry, I mean, that's going to take a big hit. And then we get to the point of not just them. Let's think about corporate America in general. Let's think about all of the companies that, all the Fortune 500 companies out there and stuff. They're all going to be thinking, you know what? We remember what happened in 09 and 08. And a lot of them started seeing it early back in 07, the recession coming. So they started cutting back employment, froze hiring, froze wages, basically just started laying people off. They started cutting the top key executives at high levels and bringing people down from lower levels and promoting them so they could pay them less. And that creates a ripple effect in the economy when that happens. And that's when you start getting into that deep recession status. And that's the thing we can't see happen, because then it doesn't matter. We're just going to be stagnated for a while.
Well, Doug said this is exactly what I'm beginning to see here in Europe now, because in Europe, we don't really produce anything. It's more like
like a service industry than a...
Yeah, exactly. And everything is shutting down and people are being laid off. They're firing people in hundreds now.
And you see that's going to be hard to recover from.
Yeah.
Because when people get laid off, they don't have money. people that have money start becoming a lot more conservative on what they spend money on. So therefore, they don't go out and buy unnecessary things as much. So therefore, it creates another ripple effect of the luxury stuff starts going out. Only the necessary stuff is around. And you just create a cascading snowball effect that's hard to get it. And you have to have some sort of stimulus in order to bring it back up. And the stimulus could be anything. It doesn't have to be basically come from the government just printing cash or something. Most of the time, the stimulus comes from some sort of private sector of coming out with something new, like technology, for example. We could have some new revolutionary technology come out that could stimulate us for another leg up or something. We had the Industrial Revolution back in the day. We had the dot-com bubble thing. We had cell phone technology and all the cool gadgets we've had since 2009 have been developed till today. So we could, something like that will help us pull us out of it. But where are we at that point? Do we have something down the road? And the only thing I can think of top of my head is we are at a area of starting because we got 5G getting ready to roll out. That's going to change. That's going to be a game changer. That's going to be like moving from a landline to a cell phone because of internet capability that's going to be on the go. And that could change and start a whole new revolution of new technology that could be just starting to flow out off of that. So that may be the thing that helps bring us out, because that's going to continue with the drone technology and the self-driving car technology and all these modern things that we hear people that are dabbling in right now that we think is fantasy are going to start coming to fruition based upon just the 5G network alone. And that could be the thing that stimulates. I think that will stimulate us a heck of a lot more than some government coming out and say, well, let's just throw cash at it until we fix it.
Yeah, but at the same time, how many businesses gonna be exterminated and people are gonna be laid off?
It'll take a while. This could take years to get out of it. Exactly. I think we're kidding ourselves that we think we're going to be able to recover off of this in a few months.
Yeah.
One of the businesses that might just blow because of the 5G, for example, is streaming services for bigger kind of services. Like you have things like Zoom and you have music, but you don't have live video, like, for example, games. You would have things that relate to games going bigger, and that would actually create a new market or a new industry. Like I can imagine some enterprises going out of business because they won't be selling things. They would be selling a streaming service instead.
All right, guys. Anyone got any other questions? We're about 2.5 hours into it. I know y'all guys enjoy this, but is there anything? I mean, I know we talked about futures. Anybody got any questions about futures that wants to kind of dip their toe into it that may have some questions on it?
If you could just go back to the monthly SPY for a quick minute.
Sure.
I'm not into Fibonacci's yet. I've never used it in my trading, but now that I'm here, I'm starting to use it. What was about the correction in 2014 to 16?
'14 to 16.
Yeah, I'm just curious.
Not really seeing much. You talking about this little pullback here?
Yeah.
Oh, well, that would, you actually got to go a little further out if you're doing the monthly. I mean, you really should be down here at the bottom. And looking at that as the top, it was just a 23% pullback. That's all it was.
Okay.
I mean, you could go with a little bit closer one if you want, but it's still part of the trend. This is the actual start of the trend. And you see it's still pretty close to the same numbers, just that the wicks just dipped below it. So it's all. You get the same results, pretty much same, idea anyway.
No, I was just curious.
Yeah. There's everything's balanced. The this is the key thing. What technicals really help with, guys, is that where you see chaos, you can actually see order whenever you use technicals. Because without the technicals, you're just running around just afraid, and the technicals give you the false sense of security, you could say. But more or less, at least you got an idea of where the lines on the road are at, and hopefully we can stay within the lines, you may say. No one else?
All right. Thanks, Dr.
All right.
Thanks,
As
Dark Side.
always.
Thank you very much.
You guys take care. I guess we'll see y'all Sunday night.
Wash your hands.
Yes.
Thanks, Dark Side.
What's on Sunday night?
The future's open Sunday night.
Futures trading, Jenny.
Oh man, what time at night? How night is it?
6
gonna be
p.m. Eastern, 5 p.m. Central.
Good
It's
night.
morning
Thank
over
you.
here, right?
What's up?
So it's morning over here.
Yeah, it should be.
Ah,
Or late night.
guess I'm
I don't know what
one
your
of the-
time zone is.